This is the Asia Trade. I'm Shery in Seoul.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour.
The tariffs are on, and the money is pouring in at a level that we've never seen before. And it's going to be great for us. It's going to be great for other countries.
Back and forth trade threats between the US and China see Asian stocks primed for further losses. A fourth session of wild swings on Wall Street, leaving the S&P 500 on the brink of a bear market. Well, Trump's additional tariffs on many trading partners about to kick in, including that 104% levy on Chinese imports, even as the president signals he's open to deal-making. But Chinese Premier Li Qiang says China is equipped to fully offset any negative trade shocks, signalling no back down from Beijing.
And we start you off with breaking news out of South Korea. We are getting the jobless rate for the month of March, adjusted, coming in at 2.9%, gaining ground from the previous month, also coming in higher than economists had expected. Of course, we have seen some private sector hiring slackening, a sluggish domestic demand, also uncertainty caused by the political crisis. We do have 193,000 jobs, though, added in the month of March from a year earlier. Now, when it comes to South Korean policymaking, we're also hearing that the government is planning a $2 billion emergency liquidity support for the auto industry, something that we had seen flagged last week, as we also have seen, of course, the ouster of President Yoon and elections triggered here in South Korea. The Korean won has really traded in a narrow range. We'll continue to watch the Kospi. Of course, has been under immense pressure, but take a look at the Japanese yen, which traded stronger against the US dollar in the overnight session. JGB yields will be watching because they jumped the most in 8 months after that US bond slump. But we have seen a little bit of a reversal on those moves when it comes to treasuries. Take a look at how we're setting up with U.S. futures as well. This at a time when the offshore yuan is holding at that 741 level against the U.S. dollar. Of course, this was the key measure that we're watching right now, because we have seen the PBOC now set its daily reference rate for the yuan at the weakest level since 2023. So the offshore yuan strengthening a little bit from the record lows that it touched earlier. But still, we're watching it closely to see any more action coming from Beijing that could perhaps escalate trade tensions with the United States. The S&P 500 fell for a fourth consecutive session. Take a look at how U.S. futures are setting up. We continue to see this back and forth trade threats between the U.S. and China that led the S&P 500 to lose more than 10% since President Trump detailed those tariffs last Wednesday. And at one point, even pushing the S&P 500 down about 20% since its record close in February. So we're really inching closer to that bear market. You can see crude prices also taking a hit below that $60 a barrel level. VIX futures also pointing to the upside, Haidi.
Well, President Trump, Shery, pushing ahead with 104% tariffs on many Chinese goods despite efforts to negotiate with U.S. allies and China. Higher duties are set to kick in and come into force on Wednesday after midnight New York time. That's noon if you're watching in Hong Kong.
He believes that China wants to make a deal with the United States. He believes China has to make a deal with the United States. It was a mistake for China to retaliate. The president, when America is punched, he punches back harder. That's why there will be 104% tariffs going into effect on China tonight at midnight. But the president believes that Xi and China want to make a deal. They just don't know how to get that started.
Let's bring in our Bloomberg editor, John Hani, and our China correspondent, Min Lo, with us now. And John, I'll start off with you. We're seeing defiance from both sides, right? It's interesting. President Trump thinks that China has to make a deal. We're not hearing anything but defiance from Beijing at this point. Is there a concern that, at tariffs over 100%, this could end up being an own goal that hurts American consumers?
Well, those consumers are on a bit of a buying spree here in this country, picking up everything from iPhones to cars to toothpaste to olive oil to camping equipment before these tariffs go into effect at midnight our time. But the president, despite concerns of consumers, and the American people are very aware of this, unlike, say, other government policies, despite that and the tumultuous markets that you mentioned earlier, His resolve seems to be unshaken. There's no signs of hesitation, let alone retreat on the part of the administration.
And no retreat from China either. Min, we heard from Li Qiang actually expressing some optimism about the Chinese economy as well.
Yeah, clearly it is trying to inject this sense of confidence in the economy, right? Because Li Qiang is saying that the country has enough ample policy tools to deal with the market turmoil now, expressing confidence in the growth. And this was in the context of his call with Ursula von der Leyen, the European Commission president, saying that, hitting back at those punitive measures from the US, saying that those are protectionist, unilateral, and a form of economic coercion. And this is clearly in some ways also part of China's outreach to other regions like the EU. We know the presidency is also planning to visit Malaysia, Cambodia, and Vietnam in the coming weeks as well to try to diversify China's trade from the US, given that the 104% tariff is pretty much going to decimate all trade between the two countries. And so that call there with Ursula von der Leyen, he also talked about having the two sides having more strategic dialogue over cooperation on trade, digital and green developments as well.
It's interesting. According to President Trump, according to the White House, they think that China badly wants to make a deal. They don't know how to get started. And he says, we're just waiting for the phone call, right? Is there any sort of inclination for Beijing at this point, as things become ever more escalated, to be conciliatory? Because we know that that's probably not political capital that President Xi wants to spend at home either.
Yeah, as you said, President Xi is in a difficult position because if he engages, he risks looking weak to his domestic audience. But if he doesn't, he risks escalating things further. And interesting to note Trump's point as well. He said he's waiting for the call in Beijing. This is actually a softening of the tone from a day earlier when he had threatened those additional 50% levies. He said that he is going to terminate all requests for meetings from the Chinese side. But it seems like this time he's saying he's waiting for that call, but he wants China to be the one picking up the phone. Whether or not China will be the first to do so is still a question, but we know that the Chinese Commerce Ministry had said they are still looking for dialogue. They're not closing the doors there, but they're also not taking any chances, and that's why they're pulling all the stops to try to support the economy, to ring-fence the economy from these external shocks, and to prepare for a prolonged standoff.
Will that prolonged standoff also include devaluation of the yuan, Min?
Yeah, that's the thing that we are watching very closely because, as you said, the PBOC set the fix above 7.2 yuan per dollar for the first time since September 2023. Is this the beginning of a more aggressive sort of depreciation of the yuan? That's the question. But there are a few things to note in terms of how this is different from the first trade war. The first trade war, China depreciated the yuan within 7 months by about 11%. But at that time, the starting point for the yuan is pretty strong. It was around 6.3 yuan per dollar. This time, though, the yuan is already trading at historical low end of the range, which means that the space for depreciation is lower. And given what we have heard from the NPC, the comments there, policymakers repeatedly signaling that the priority this year is to maintain basic stability of the yuan. At least the Bloomberg Economics thinks that China will not depreciate the yuan so much this time. It would help them to push that inflationary pressure back to the U.S. It would preserve more policy space for China to ease its monetary policy, and it would prevent the sort of retaliation from other countries if you see a great devaluation of the yuan and this outflow of cheap Chinese goods into other countries as well.
John, we're seeing President Trump busy lining up potential negotiations with some U.S. allies, the likes of Japan and South Korea, for example, even if the standoff with Beijing continues. I do wonder how much internal pressure he's under, right? Because we're seeing these signs of infighting within his inner circle between Elon Musk and Peter Navarro, for example, the loss of support from key Wall Street backers like Bill Ackman, too.
Well, so far, any objections or reservations have not made their way into the Oval Office. His resolve seems to be unshaken. And also, it doesn't matter. It doesn't seem to matter who who the trading partner might be or how close he might be to whatever leader. He and Benjamin Netanyahu, the Prime Minister of Israel, have been strong supporters of one another for many years. Mr. Netanyahu came here this week looking to perhaps get some sort of a break on the tariffs imposed on Israel. He didn't get it. And some of these trading partners have been told, you're welcome to negotiate, you're welcome to talk, but the tariffs go into effect at midnight. Live with it.
Yeah, especially when it comes to partners like the European Union. But at the same time, President Trump seems to be prioritizing some of its Asian allies when it comes to these negotiations.
That's right. He said today that the new president, the acting president, I should say, of South Korea and Japanese officials will be on planes heading for Washington to talk. We'll see how that plays out in the next few days. And, of course, maybe not President Trump, but everybody else is watching the markets. And and Republican politicians as well. The president is addressing the congressional campaign arm because, the 2026 elections are getting closer and closer. So there'll be plenty of eyes on what happens on events over the next few days.
Our Bloomberg News editor John Haidi and our China correspondent Min Min Lo there as that countdown continues to 104% tariffs on Chinese goods. Coming up on the Asia Trade, we'll be talking about how to navigate these markets with BMO Private Wealth and UBS as we see another session of struggle overnight set to really pass through to the Asian session. We'll be talking about what's next in this trade war with the Center for a New American Security. Plus, an exclusive interview with the Maybank president and group CEO. Much more ahead. This is Bloomberg.
The president has been clear again that he's not doing exemptions or exceptions in the near term. My own sense is, given the tariff differentials between Asia and Western Hemisphere, I think people can start making decisions based on that.
U.S. Trade Representative Jamison Greer, they're testifying before the U.S. Senate Finance Committee in a session on Trump's trade policy. This as, of course, we continue to count down to that midnight New York deadline for China to respond. Otherwise, we're going to see 104% tariffs on some Chinese goods hitting China. Hitting China, I should say. And we really don't, at this point, have expectations of a favourable response from Beijing, given that we did hear from Beijing yesterday saying that they would fight to the end. We've also heard that note of defiance from Premier Li Qiang saying that the Chinese economy is actually well placed to be able to withstand and fight against Trump's tariff war. This is a picture when it comes to US traded China assets, so we do expect that pain to spread to the Asian session as we saw another session of volatility and concern really on Wall Street. Let's bring in for the market view Khairussaleh Schleif is the Chief Market Strategist at BMO Private Wealth. Carol, great to have you with us. And, you, like a lot of other people, are urging investors, market participants to stay calm. It's easier said than done at this point. How are you positioning?
It's definitely easier said than done. And one of the things we're doing is really reminding people that this time around, diversification worked coming into this period, and also reminding in terms of having fixed income in the portfolio, having globally diversified positions helped. No one likes to see what we've seen in the last 3 or 4 days, let alone 3 or 4 weeks. And it's hard to remember that less than 2 months ago, markets were hitting all-time highs. But that said, when you get short, sharp downturns like this that aren't caused by a fundamental break in some major sector of the economy, a lot of times they can be reversed just as quickly. And we saw them reversed on an errant headline yesterday with $5 trillion moved around in the market in a matter of minutes just on a positive headline. So clearly in the short run, people are position trying to watch for trade announcements and trade progression. But if you're not in the markets, if you're not taking a stance across a variety of asset classes, you're going to miss the way this potentially plays out. And there is a chance hopefully to walk some of this back, but it's pretty clear that positions are pretty steady, at least for the next few days or weeks.
Carol, you talk about international diversification as one important play. Does that include China? Because we just saw, the trading when it comes to US-listed China assets. But we also know we saw that bounce back yesterday, and a lot of that is because of the kind of powerful weapon that's wielded by state funds, state investors, and regulators that can step in.
Right. It does include China, and we tend not to make country-specific calls, but from a sectoral standpoint, there are things going on in the Chinese environment in particular in terms of predominance across technological innovation, the relationships they have with other countries. There's a lot of things going from a secular basis going right there, and so that's part and parcel of having diversified portfolios. But for years, it's been hard to fight, especially our U.S.-based clients and even the Canadian-based clients. It's been hard to fight that message of U.S. exceptionalism that everybody was talking about up until the first part of the year and convincing people to be globally diversified. But it really has paid off, especially year to date through the end of March anyway.
The fact that we are getting all of these market sell-offs globally due to the fact that policy has changed in the U.S. instead of the fundamental change in the state of the economy, like in 2008, that was a housing market crisis, does that make a difference in how deep and extended this sell-off can be?
It makes a difference in how fast we can recover from it, but part and parcel, that is, you're never supposed to say it's different this time, but it is there are components to this situation that are different because, as you pointed out, it's policy, not a major sectoral breakdown of a particular sector that's going to take a long time to fix. So if policy is what instigated this, policy can pull it back too. And so there are a variety of things we're watching in the United States, not the least of which are there legal challenges. Do the consumers, once these tariffs are in place, you mentioned earlier a lot of front running that's going on, but when these really truly start to hit, do we see such a hue and cry that there's pushback that comes back from Congress to the president? And maybe that's part where if he's not paying attention to the markets, maybe he starts paying attention to the base.
We have two monetary policy decisions across Asia today coming from New Zealand and also India, both central banks expected to cut rates. How much more difficult does this whole market sell-off make it for the likes of central bankers, including the Fed? Of course, we have seen pricing for the next rate cut all over the place in the last few days.
Yeah, it undoubtedly makes the Fed's job trickier because they've got to watch their dual mandate. And as Chairman Powell said in prepared remarks last Friday, this tariff regime, should it stay in place, has in all likelihood will bring growth rate, the overall GDP growth rate down and keep inflation sticky, if not push it up. And so you're running dangerously close to the S word, the stagflation word that everyone talks about. We don't think you'll get there, but it depends on how fast pieces of this policy are ameliorated in terms of is the average rate of 20+%, does that get brought down? Is there some sort of resolution, particularly with China and South Korea and Vietnam and other key trading partners where we import so many of our goods from? And it's not, we talked to many, many companies. They've been talking for years, trying to figure out how to reposition supply chains, and it's not something that you can do overnight.
We're even seeing US Treasuries lose their Haven appeal. Is there a concern about a rapid and messy unwind there? And if you're looking at that sort of diversification for non-correlated asset classes, what would they look like?
Well, I mean, one of the asset classes that we've been very favorably disposed towards is catastrophe bonds, because they're not moving off a market cycle, they're moving off of weather cycles and other things like that. But we don't necessarily think that treasuries are losing their haven appeal in terms of not just treasuries, but fixed income in general and portfolios. It's a question of where do you want to be on the curve. It's also worthwhile remembering that when markets were melting down globally in 22, even you didn't even get paid to sit in cash back then because it took a very long time. It wasn't until the very end of that year that we saw rates on short term, and we're nowhere near that here. You are still getting paid to sit in shorter term treasuries and cash, so it provides nice ballast to portfolios.
Carol Schleif, good to have you back, Chief Market Strategist at BMO Private Wealth. And of course, subscribers can also turn to the Bloomberg for more on all of the fallout coming from President Trump's tariffs. Go to TLIV Go to get commentary and analysis from our expert editors. We do have more ahead on the Asia trade. This is Bloomberg.
If Trump weren't there, if we had a sane person as president of the United States, that sane person would be taking a very hard line on China because the Chinese are in fact not good. They're not team players in the world economy. And the Chinese are still trying to do that, which is insane because it's the United States clearly, is not going to be a market, and the Europeans, the rest of the world is not going to take their stuff either.
Economist and Nobel laureate Paul Krugman on why he still sees China as a bad actor in the global economy despite Trump's reciprocal tariffs. And Heidi, we've seen really the reaction coming from the business sector as well. Business leaders really talking about the tariffs and the repercussions on the economy. The latest we heard from Bill Ackman, also a mea culpa sort of social media post talking about how he really didn't foresee this move. He had previously, of course, supported President Trump only months ago. He has celebrated President Trump's victory, predicting the most pro-growth, pro-business, pro-American administration. But you can see right there that he's now advocating for a pause when it comes to the tariffs, that they could harm the most vulnerable companies and citizens of the United States. And he's really not the only one who's been talking about a need to pause, about a need to really try to look at these tariffs in a different way and try to come to the negotiating table. Jamie Dimon saying that they may be disastrous in the long run as well.
Yeah, and hence we're seeing all these sort of heightened recession calls from the big voices on Wall Street, right? But there's even quite a bit of sort of infighting and disagreement within the inner circle for President Trump. We've been hearing on the social media sort of fight between Peter Navarro and Elon Musk, right? Elon Musk straight out calling the trade advisor, quote, a moron. He's saying that he is, quote, dumber than a sack of bricks and truly a moron. So this dispute kicked off after Trump announced that minimum 10% tariff on most imports. Navarro actually advocated for more aggressive action. His measures wanted to kind of try and boost domestic manufacturing even more, but we did hear that President Trump weighed even steeper tariffs than what we got that have already, of course, as we know, traumatized global financial markets and triggered recession fears all over the world. But Peter Navarro did want to go bigger. This disagreement between Musk and Navarro continues. More ahead on the Asia trade. This is Bloomberg.
I think that depends on the Chinese. And, my advice to them would be that they have a lot more to lose than America does, that America holds the leverage, and everybody knows that, and therefore they should seek a détente, and they should offer concessions which would persuade the president to relent.
Chairman of the White House Council of Economic Advisers, Stephen Moran there. Take a look at how markets are setting up as we had another session of stress really on Wall Street, volatility continuing to extend these concerns over this imminent deadline at midnight New York time of 104% tariffs on China should Beijing not respond favourably and withdraw those retaliatory tariffs. We don't expect that's going to happen given the rhetoric that we've heard from China over the last 24 hours or so. We are seeing that play out when it comes to FX as well. Dollar yen is holding at that 145 level there. The yuan is really one to watch at the moment, with the PBOC potentially set to reveal a little bit more on what they're willing to do, whether to retain that tight leash on on the yuan or to allow it to weaken to counter the fallout from these increasing US tariffs. So for that, we could be watching an increase in bearish bets on the economy, of course, worsened capital flows and further antagonization of the US, of course, which has been critical of currency policy as well. Take a look at the euro. We're trading a little bit more favorably there, with European stocks and assets really seen by some analysts as being a favorable diversified, despite, of course, Europe being hit by tariffs as well. We saw stocks in that market rebounding after the worst four-day drop since 2020. Shery.
Haidi, our next guest says the global economy is going to see shocks that can't be fully anticipated because this level of tariffs is unprecedented in the era of globalization. Emily Kilcrease is a senior fellow and director of the Energy Economics and Security Program at the Center for a New American Security. She previously served as a Deputy Assistant U.S. Trade Representative. Emily, it's great to have you with us. So, where do you see a circuit breaker when it comes to China and the U.S.? Because both sides don't seem to be backing down, at least for now.
I'm not terribly optimistic that we're going to get to a situation where the U.S. and China are at the negotiating table looking for off-ramps anytime in the coming weeks or months. I think if the U.S. is taking the position that China just needs to come to the table with concessions and recognize the U.S. position of dominance, that is not setting us up for success here. China clearly does not want to look like it's caving to the United States. It believes it has its own leverage to play here, including around things like critical minerals and its own domestic market. It's also going to try to peel other U.S. trading partners away from the U.S., recognizing that the U.S. just hit everybody with significantly high tariff rates. So I would be quite pessimistic that we're going to get to this sort of leader level summit that's going to fix all of these problems anytime soon.
And yet we seem to be getting some signals from the Trump administration that perhaps they're going to be prioritizing some of those talks with Asian countries such as Japan and South Korea. Not so much for the European Union. What does this mean for trade relations between Washington and the rest of its trading partners?
I think they're prioritizing at this point the talks where they think they can make quick progress towards a deal, and certainly prioritizing those countries that are not signaling retaliation. The administration has been quite clear that it does not want to see additional tariff escalation. It will hit back if it is hit back again by these trading partners. And so I think that explains some of the dynamic with Europe here. There's also clearly a strategic reason to try to work with the Japans, the Koreas, Taiwan first. Those are countries that will feel a strong pull from China if they're not able to come to a quick resolution with the United States. It's going to be a long negotiating line. The U.S. is going to have to figure out some level of prioritization. I expect that Europe will be on deck in not too long, though.
Emily, I wanted to get back to your previous point about Trump wanting China in particular to come and sort of this acknowledgement of American supremacy, right, to concede. That, I don't think, is political capital that President Xi is willing to expend at this point. And contrary, do you think that Beijing is actually now looking at an opportunity here to be able to, knock down American hegemony by taking advantage of some of these other, trade and supply and alliances that it's been building with other partners?
Absolutely. I think Beijing is going to look for opportunities exactly like that. If you do a quick comparison of U.S. tariff rates versus China tariff rates now, for the first time in I don't know how long, decades, if not a century, the U.S. actually has higher tariff rates on a lot of these countries. China is going to make hay of that. They are going to put forward the message, as ludicrous as it is, they will nonetheless put forward the message that they are the ones upholding the international trading system that is so important for many of these mid-sized economies. So I do think the U.S. needs to be quite careful in terms of how it plays the China angle here, because there certainly is a scenario where big chunks of the ASEAN grouping or the global South see themselves as between a rock and a hard place, and it's not clear that they would choose to prioritize their economic relationship with the U.S. in that context.
Emily, do stay with us. We are just seeing President Trump there arriving and about to deliver a speech at the NRCC dinner. Take a listen.
See the shining sea, from Detroit down to Houston and New York to LA, where there's pride in every American heart.
Well, of course, been watching very carefully to see what President Trump has to say. Of course, this sort of high-stakes game of chicken between Beijing and Washington continues. President Trump, in the meantime, has also been scheduling some trade and tariff talks with some traditional U.S. allies, the likes of Japan and South Korea, where the picture there for potentially coming to the negotiating table looks a little bit more optimistic. We've been seeing, of course, despite President Trump saying that Beijing really wants to make a deal, Shery, in China, we're seeing President Xi's number two, Premier Li Qiang, expressing optimism and defiance, saying that China's economy this year and forthcoming can withstand the trade war threat and has ample policy tools to fully offset some of that negative impact.
I mean, it was quite something to get that statement from the Commerce Ministry in China, right? That China will fight to the end if the U.S. insists on these new tariffs. And now we're getting some more semblance when it comes to what the escalating trade war could look like, as we're seeing Washington also sort of prioritize some of those talks with trading partners, including South Korea, Japan, and perhaps Italy, that they have already talked with those leaders. There are nearly 70 countries that have reached out to strike a deal, according to White House officials. Let's listen in to what President Trump has to say.
And, we've done very well in this room before, but right now we broke every record. I just heard from Mike Johnson. He said, we broke every record, sir. There is over $35 million. That's not bad for an evening. For an evening, that's not bad. I wonder if you ever turn the room this way. You know, it's interesting because I love real estate. I love ballrooms, have nice ballrooms, a lot of them. I wonder if they ever turned it this way instead. So it might be interesting. This way I'm not talking to a wall. They think they get a better view, but actually I'm not sure. But next time, maybe we'll have to worry about that next year. Well, we'll do 45 or 50 million, right? I mean, a lot of people, you broke your record attendance and you broke your money record, and that's a great tribute to the Republicans and the party and everything it stands for. And it's wonderful. And I want to thank especially Speaker Mike Johnson, because he's been incredible. And we have some unbelievable supporters of our House Republican majority with us, as you know, and with the help of everyone in this room. The next year's Republican Party is going to defy history. We're going to really defy it, and we already are. We're getting things done. It's going to be very interesting to see. This is going to be a very interesting year. We have an interesting time. We're making a fortune with tariffs, $2 billion a day. Do you believe it? I was told $2 billion a day. You know, I get hit by the press about tariffs. We're making $2 billion. This isn't 35 million, that's peanuts. $2 billion a day. And then they say, gee, they don't know. You know, this is only the enemy can be talking this way. In addition, we have a lot of countries coming to see us. They want to make a deal. And we're doing things that nobody's ever even thought about doing. And we're going to defeat the radical left Democrats who are out there complaining about everything. All they do is complain, and then they want to put men and women's sports and things like that. They want men and women's sports. They're still fighting for that. I saw this poor guy. You all know him. I won't mention his name. He's sort of a nice guy. He's a loser. He's a Democrat, but he's a loser. And he was fighting on a big show this morning. We've got to have that. It's not fair that, essentially, that men aren't allowed to compete against women. Can you believe this guy? But let them do it. I say we shouldn't be fighting a lot of these things. Just let them go. And then just before the next election, we'll unleash on them. Because it would be very sad if they actually changed their policies. We don't want that to happen. But we're going to win the midterm elections, and we're going to have a tremendous, thundering landslide. I really believe that. And it's so important that we pass the big, beautiful bill, because that's going to be. And I really think we're helped a lot by the tariff situation that's going on, which is a good situation, not a bad. It's great. It's going to be legendary. You watch. Legendary in a positive way, I have to say. It's going to be legendary. But I really think it actually puts pressure on those few Republicans that just can't get there. You know what the alternative is? A Democrat bill or a chapter for the country. You know, we have the debt continuation. And they have to do this. They have to get there. And I think we are there. We had a great meeting today. I think we are there. But just in case there are a couple of Republicans out there, you just got to get there. Close your eyes and get there. It's a phenomenal bill. Stop grandstanding. Just stop grandstanding. Boy, oh boy, oh boy. You know, their policy, the Democrats, is horrible. It's horrible. Think of it, open borders. Just all of the horrible, stupid things they have. You don't have energy. You don't have anything. They've lost their confidence. Everything is bad. But the one thing, they always vote in unison. You don't see somebody that's holding up. I'm going to hold up. And the alternative is hell. You know, the alternative is hell. So the Republicans just have one little thing the Republican Party has to do is get together and damn vote. If you're a single guy or a second guy, and you fight like hell for what you get, and then in the end you have to vote because the policy is phenomenal. You know, they don't get every little ounce. It doesn't work that way. And this bill that we're working on now is the best I think we've ever passed. Mike, wherever you may be, it's the best. I think it's the best thing we'll get it passed. But I think it's going to be the most important thing we've ever passed. It's the best thing we've ever passed. And I do think that the war with the world, which is not a war at all, because they're all coming here. Japan is coming here as we speak. They're in a plane flying, lots of them, all tough negotiators. But things that people wouldn't have given us 2 years ago, wouldn't have even thought of it 2 years ago, 3 years ago, 5 years ago, 7, they're giving us everything. They don't want tariffs on themselves. And it's very simple. We're making deals, and people are paying tariffs. Countries are paying tariffs. Right now, China's paying a 104% tariff. Think of it, 104%. Now, it sounds ridiculous, but they charged us for many items 100%, 125%. Many countries have. They've ripped us off left and right. But now it's our turn to do the ripping. That's okay. We're going to make our country even stronger, stronger than it ever was. And 26 Republicans will fight for every state, every seat, and every single vote. We're going to fight like hell. I intend to personally campaign for candidates all across the country, and we just won't. You're right about that. We won't just keep our majorities. We want to expand our majorities by a lot. You know, there's this thing about midterm elections that you have a president and they never seem to win. I don't understand. They never seem to win the midterm elections, and I have no idea why. You know, we're not going to let that be a self-fulfilling prophecy. I have no idea why. We're setting records right now. We're getting more things approved than any president has ever done in the first 100 days. It's not even close. I had somebody say the most successful first month in the history. Now they said the most successful 100 days in the history of our country, and I believe that's right. And we're going to continue that way, if not more so. And we're going to do tremendously in midterms. There's no reason we should do great in the midterms. There's this thing that, for some reason, the president, whoever the president is, the midterms are tough. Why would they be tough? If we're doing great, they should be easy. And I'm telling you, we got to win a lot more. But as Mike said before, I happened to listen to him. He was on C-SPAN 1. That's a big upgrade, right? I was listening as I was putting on the tie. How does it look? He was on C-SPAN 1, and they were talking about that. And I thought to myself, because people love him and they love your leaders, they love, really, the party is just doing well. A couple we could do without, to be honest with you. But the party is doing well, and there's no reason we shouldn't just get together and win these midterms and win them by a lot, because 7 that I heard Mike talking about before, 7 is not really enough. But we lived for 1 for a period of time. You know, the only thing good about 7, when you have 1 and now all of a sudden you have 7, it sounds like it's like a landslide. It's so good. It's like the most amazing thing. 7 sounds so good when I hear that. It sounds like we can't be beaten. And we should be 50, 60 up. Honestly, we should be 100 up, because based on policy, these people have the worst policy that anybody's ever seen. There's something wrong with them. Honestly, there's something wrong with them, all this crap. 13 House Democrats currently represent districts that voted for Trump and voted for Trump big. And in 2026, we're going to tell them, all 13, that you're fired, get out, get out. No reason for that, 13, but 13 is a small number compared to some of these stats. We are going to work very hard. I'm going to do tele-rallies. You know tele-rallies? I'll do rallies for a lot of you, but I'll do tele-rallies at a minimum. And we just had 2 great elections, by the way, and I heard everybody is introducing our 2 new Congress. Where are they, please? Stand up. I want to look you in the eye. I want to look you in the eye, Randy. Look at the 2 of them. What a job you did, man. Huh? You were never in doubt. Where's our second person here? I know there he is. Boy, they gave him a lousy seat. He's behind. Great job. We're proud of you, man. Great job. Great job. Thank you. And, both elections, they were saying, it's going to be close. It's going to be close. And I was listening. And they won by, you won by, 17 points, 18 points? I don't think that's close. I don't think it's close. So we won by 15 and 18 points. And they're saying it was a terrible evening for Trump. Can you believe it? Terrible evening. They only won by 18 points and 15 points. Anyway, good job, both of you. Good job. But in addition to our fantastic House Speaker, we're pleased to be joined by Majority Leader Steve Scalise. And I watched you too, Steve. I watched you on C-SPAN 1. And Steve has suffered greatly. I mean, I was there the night that it looked like he wasn't going to make it. He's very brave. He suffered greatly. And I tell the story about the baseball game where, he was really, the doctor told me, sir, I've never had anybody lose so much blood. It's not looking good. And his wife loved him. She was such a disaster that night. She was crying. She was crying because I've been with people that were in serious trouble and the wives couldn't care. They couldn't care less. In fact, after they recovered, I said, do yourself a favor, get rid of the wife. She couldn't. No, I'm only kidding, of course. I'm only kidding. I like to say I'm only kidding. That way, that cleans it up a little bit for the press. I say I was only kidding. No, I've seen some wives that were truly not bothered too much. I had one where the dog died and the husband died on the same day, and I said, it's too bad about Harry. No, but Lucy died. Lucy, oh my God. Harry didn't mean, he left her a fortune too. Can you believe it? Harry didn't matter. The dog mattered a lot. But I was with Steve, and he was really, that was a tough thing. And then, amazingly, he was, like a year later, he was in the baseball game against the Democrats, and he's playing second base. And he was having a hard time. It's a hard time getting around. And with his luck, a shot was hit to him on the ground, a ground ball. And he got down, and that ball was, no way that ball was, it was right at him, but really, it was whacked. I don't know who the hell hit it. It looked like a major league ground ball. And Steve went down and blocked that sucker and got on his knees and threw it to first base. It was the most unbelievable thing that it could happen. This was God watching a game, I'm telling you. Does everybody remember that? He blocked it, or knocked the hell out of his foot. Not his glove, it was his foot. And he got down and grabbed the ball, threw it out, and got the runner by quite a bit. And they then took him out of the game. And I said, what a great move. That was a good manager. They took him out of the game because you can't improve on that, let me tell you. But he had great courage, and amazing how he's done. And he's been very special, and all of us know it. He's really done great. Another man I've really gotten to know a lot, and I think he's fantastic, is Tom Emmer, Majority Whip. I think he's fantastic. Where's Tom? Where's Tom? Where is our Tom? Because I want to see his wife. His wife is better than him. He admits it. Oh, that's good. Hi, Tom. So where is she, Tom? Oh, no. She's not. She's home. She's watching C-SPAN. Yeah, I know. Thank you, Tom. Great job you do. And Lisa, you were up talking about Donald Trump tonight. And Lisa McClain, conference chair, she was talking about Trump. And I appreciate it, Lisa. Lisa, where are you, Lisa? Just like a roast. Thank you, darling. I saw your whole speech. I watched you and Steve and Mike. I watched the whole thing. Then they said, sir, we have to leave. You're going to be late. I said, I want to watch your speeches. And we have Richard Hudson, the NRCC chairman, who set the record tonight. Richard, great going. That's a great job. And Brian Jack, who was with me from day one of my political career, he was so fantastic. He was so fantastic. And he came to me, he said, do you think it would be okay? He wanted to run for Congress. He always wanted to run for Congress. It was the most important thing. But he was with me, knows so much about politics and boxing. He knows a lot about boxing, too, but he loves politics. But he really just wanted to run. I think his ambition was to be a congressman. And the seat came due. A good member of Congress actually retired, and Brian in Georgia. And Brian said, what do you think, sir? I said, well, you got my endorsement. And he won by a lot, and he's never looked back. He's a fantastic guy and a great political leader, a great politician. Brian Jack. Where are you, Brian? Where are you, Brian? Hi, Brian. Great job. Proud of you, Brian. And more than 160 members of Congress, and I'd like to really, you've done incredibly well. They're really looking back. And, you know, I said before, the Democrats have taken a lot of beatings. They have lost their confidence. They've gone crazy. They've gone crazy. How about this new one they have? Their new star, Crockett. How about her? Is that real? Are they serious about that? That's their new star? If that's their new star, they're in serious trouble. I mean, this is Crockett. Oh, man, oh, man. But we've done a job, but they've totally lost their confidence. And it's a hard thing when you lose your confidence, but they have. They've taken a lot of beatings, and now they're going to rely on Crockett to bring them back. Crockett's going to bring them back. You ever watch this? Last November, all the leaders here tonight were given a mandate from the American people, and at the presidential level, we won, think of this, all 7 swing states. We won the Electoral College 312 to 226. That's not bad. Remember? The fake news was saying it's going to be tough because people like Trump, but he should be able to get 270. I actually went to Nebraska and campaigned for 1 vote. I went to New Hampshire. I campaigned because they said that it could be we're 270, 269. So I'm going to all the places, and I'm trying to get 1. We won Nebraska big, but there was 1 area. And I went there. I went all over the place campaigning, and then we get 312. But we won in a landslide, too, because we won the popular vote for the first time of a Republican in decades. And now I think that's going to be done routinely. We won 85% of all counties in America, 525 for them and 2,725 for us. That's that map that you see. It's all red except for the 2 corners. They have a little blue, a little line of blue. For the first time in history, all 50 states shifted toward the Republican Party. First time in history. It's never happened. It's a shift. It shifted Republican. And today there are more registered Republicans than any time in the history of our country. How good? How about that? Meanwhile, approval ratings for the Democrat Party have plunged to the lowest level ever recorded. They're at 26%. So you tell me about the midterms, right? 26, the lowest level ever for either party. The Republican Party is a much bigger party now than it was ever before. And I must say that it's the biggest now since you heard the name Donald J. Trump running as a politician. You heard the name before, but not as a politician. I said to my wife, you know, I think I'm going to do this thing. Do I have your approval? Yes, darling, I think you'll win. See, she's a supportive First Lady. I don't know if she believed it or not, but she said it. She said, yes, darling, I think you'll win. How do you think I'll do? Oh, darling, you'll win very easily, even though I've never done it before. I said, I have one problem. I've never done it before. She said, that doesn't matter. You're so talented. I said, thank you very much. This is why we get along. It's easy to get along like that. But we have far more people and far more enthusiasm than the party's ever had. I think I could almost say than any party's ever had. I don't think any party's ever had more enthusiasm than us and spirit. A lot of that's our leadership. The Democrats are a broken party with bad policy. They've lost so much, and both as politicians and as people, they've lost. The stage is set for a monumental victory for the Republicans in the midterms. And many of you, I guess most of you, so many great congressmen and women here. You got some senators here also, but many of you are, all of you are up. We've got to win. We've got to work really hard, and we've got to win, because there's no way they should be winning based on policy, and it's ultimately about policy. We simply have to keep our promises to the people, and we have to very simply put America first. Put America first. And I said, I ran on common sense. You know, I ran in, it sounds like a phrase that would have been used, I don't know, nobody tells me it was used in politics before. Now everybody's using it. I see the Democrats, some Democrat guy who was a real sleazeball, got up. He said, yeah, I ran on common sense. That's what I did, common sense, yeah. And I said, gee, but the problem in politics, you come up with a little slogan and they copy it. But, you know, they copied no tax on tips. Remember, I said no tax on tips. Nevada hadn't been won for many years by a Republican. And state of Nevada, and don't ever call it Nevada. You'll lose 25%. Call it Nevada. It's true. It seems almost nicer the other way. You know, Nevada sounds like Brooklyn. Does that make sense? I come from Nevada. But don't ever call it Nevada, call it Nevada. But as you know, the corrupt globalist establishment that ruled our country for decades is now complaining that I'm doing exactly what I pledged to do in the campaign. All of these things, tariffs, the men and women's sports, everything. The borders, strong borders. We have the strongest border we've ever had today. It was just announced. Strongest border. They don't want to write that. You know, they forget. They forget. Eggs. I came in eggs. Not a very glamorous thing to talk, but eggs. I was in for 1 week, and they said, egg prices are soaring. I said, I've just been here. I didn't know this, please. I didn't know it. The fake news, they're going, egg prices are soaring. I said, man, I just got here. You know, let me know about it. What's going on with eggs? Tell me. So they gave me a little bit of a thing, and it's true. Under Biden, they soared like double, tripled, quadrupled. You couldn't even get them. They were not available. They said, don't use eggs for Easter. Use the plastic alternative, plastic. We got, at Mar-a-Lago, we got plastic eggs all over the place. They said, don't use it for Easter. If you're doing an Easter egg hunt, do not use eggs. Well, we have a wonderful Secretary of Agriculture, as you know, Brooke Rollins. She's here someplace, I think. And she went after it. When she goes after something, we don't play games, right, Brooke? And egg prices are down now 87%, and you have all the eggs you want, 87%. And they didn't write about it. They don't talk about it. I go up. And egg prices are down now 87%, and you have all the eggs you want, 87%. And they didn't write about it. They don't talk about it. I go up, I make speeches about eggs all the time. I never get a reporter writing about it because we were successful. If you're a Republican, when you're successful in something, you have to toot your own horn. Talk about it because you're the only one that's going to. It's a rough business, I will tell you. But the shrill voices that you're hearing this week about tariffs are the same scoundrels and frauds who never thought twice about when the United States lost 90,000 factories and plants. Think of that, 90,000. How do you do 90? If you had a map, a big map the size of that wall, and you had a pin for each factory, you wouldn't have enough room. You think of it, 90,000 factories since NAFTA, the worst trade deal in history, by the way. And we had it terminated. Everybody said you'd never be able to. It had to be terminated by Congress, and it was not easy. It was so bad. You know, the people have a lot of, it's very interesting, they have a lot of power. They have a lot of political power. It's hard to get even a bad deal terminated, but we did do it. And we got USMCA, and that's been really great. But when they cheat, it's not so good. And they cheat. They do cheat. You know, I respect Mexico. I respect Canada. But they cheat like hell. You know, Canada charges for our dairy products 270%. Nobody knows that. They charge you 2% for the first 2 cartons of milk. And after that, you go up to 270. And the press says, they've only charged 2%. No, that's for the first 2 cartons. So it's, you know, we can't have that. And we have to be wise to it and get along with everybody. But we have to call people out. 6 million manufacturing jobs were lost since NAFTA when 21 million illegal aliens poured across our borders. Think of that, many of whom were violent criminals, murderers, drug lords, and the mentally insane. Insane asylums were closed. They used to go crazy when I talk about Hannibal Lecter, the late, great Hannibal Lecter, right? Silence of the Lambs. The fake news would say, why does he talk about that? He's a fictional character. He's actually not. We have many of them that came across the border. He's actually not. But when the people went to the voting booth, then we understood why he talked about that, because they voted for us. They said, we don't want Hannibal Lecter in our country. The great Hannibal Lecter, he was a very important force. But the press would go absolutely crazy if I mentioned Hannibal Lecter's name, because they said he's a fictional character. No, but it was making a point. And the point is they're emptying mental institutions and insane asylums. Not anymore, they're not. Insane asylums into our country. We had numbers, the likes of which nobody's ever seen anything like it. Other countries, I deal with other countries all the time. I am right now on tariffs where they want to make a deal with us. We don't necessarily want to make a deal with them. We're happy the way we are, taking our $2 billion a day. But they want to make a deal with us, and they talk about it, and they say, we cannot believe that they had open borders. These are countries, they have, you know, they have borders, and they don't let people into their country. They can't understand how. They did it because they're sick or they're crazy. There's something really wrong with these people. But the same people now telling me about how to deal with China are the ones who sold out America for decades to China. For decades, they gave up to China. I'm the only one that you know how much? China's paid almost $700 billion in tariffs under me. And then they say, Donald Trump hasn't been tough on China. They say Trump hasn't been tough on Russia. Okay, here's the story. Nord Stream 2. Did anybody ever hear of it? It's the biggest pipeline in the world. I closed it. Russia had it. I closed it. Putin told me that's the worst thing. You're supposed to be friendly with me. I'd hate to see you as my enemy. I closed Nord Stream 2. When Biden got in, he opened it up immediately. It serviced all of Europe, going to Germany. It serviced all of Europe. We closed it, and they say, oh, he wasn't tough on Russia. I was very tough with the sanctions and everything else. And by the way, just for your information, we're trying like hell to get the fighting stopped between Russia and Ukraine. A thing that never would have happened if the election wasn't rigged. We had a rigged election. And we can say it and say it loud and say it proud because the election was rigged and we can't let that stuff happen anymore. Go to paper ballots, go to same-day voting, go to voter ID, go to citizenship. You have to prove your citizenship, a little piece of paper, and you won't have it. Sort of disappointing because a lot of Republican governors, they could do that. Same-day voting, paper ballots, very sophisticated paper, actually. It's all watermarked. You can't cheat. Very hard to cheat. France went that way. They were like us, and they were, you know, having very bad elections, very crooked elections. They had 37 million people. They voted. They had a winner. They had a loser. They went home. That was it. 10 o'clock in the evening, it was over. With us, you ever see, we have these machines that cost a fortune. And they say, we think we're going to have the final vote tally in 2.5 weeks. And wait a minute, this is election day. You ever see where in California they were counting votes 4 weeks later? And then they say, and by the way, all paper costs 8% of the machines. Why is it that Republican governors aren't going to it, okay? What's going on with our Republican governors? If nothing else, you say, even if it was just the same, and it's not, it's, you know, it's, nothing's foolproof when it comes to voting, but it's pretty close. But it costs 8%. In other words, you can have your election 8% the cost of the machines, and you get an accurate count. So it's pretty amazing. They gave us NAFTA. mass illegal immigration, the Democrats did, the fake Paris Climate Accord, and the China's entry into the World Trade Organization. That was a wonderful day for us. China entered the World Trade. They've done pretty good. And, you know, they didn't do things exactly by the books. And they were a developing nation. They still are. They say, we are a developing nation. We should be entitled to more. And our people say, oh, that's right, they're developing. They're not developing, we're developing. Look at some of our inner cities. We got to develop them. But we can't let the Democrats get away with this stuff. But we're developing more than they are. The globalists have been wrong about everything, and so I wear their attack on me because nobody has ever been attacked like a man named Donald J. Trump. In the history of our country, nobody's ever, but I wear it as a badge of honor. Nobody has ever been attacked. I was under more investigations than the late, great Al Capone. He was the most violent criminal. He was the most violent mob boss in history, and I was under investigation far more than him. It wasn't even close. Our opponents are not afraid that our America First policies will fail. They're terrified that our strategy will succeed and we're going to get bigger and stronger and better as a party, and that's what's happening, and that is what's happening. It's going to be something, and I'm actually looking forward to the midterms. I really are. We're going to prove that all of their treasonous years of betrayal will not be forgotten, because it's treason. What they did is treason. When they allowed millions of people to pour in through open borders from all over the world, they came. To me, that's treason. What they've done to our country is unthinkable. The money we have to spend to take people out, and then we have judges that say, no, let Trende Arakwa come back into our country. They want him to come back in. Killers, they cut off a man's fingers because did you, sir, make a phone call to the police in Colorado? Yes, I did. You've attacked us and you've taken over our building. They took over real estate all over Colorado. You did, right? Give me your hand. Put the hand down. Boom. Cuts off his fingers. And they want him back.
President Trump there speaking at the National Republican Congressional Committee dinner there in what has been a really expansive speech that's run over 30 minutes now, including starting off his speech by saying that we're making a fortune on these global tariffs. He cites that number of $2 billion a day, which is interesting because we do have the Treasury customs data on these taxes, which come in at about $200 million a day so far this month. There'll be fresh data available for March this week, so we'll get sort of the latest picture. But President Trump is claiming that there's $2 billion a day coming through from global tariffs. Of course, we are waiting for the 104% tariff set to take effect on China by midnight New York time, and Trump reiterated that China is paying that 104% tariff there. Also spoke about optimism, looking forward to midterm elections, trying to get the fighting stopped in Ukraine, but also criticising the trading partners of Canada and Mexico, saying they cheat on trade. Shery.
Yeah, Haidi, President Trump also talking about how Japanese officials are now flying into the United States for negotiations. Take a look at how these markets are coming online, because it's a bloodbath again, with the Nikkei and the Topix down more than 3%. Every sector in the red. Energy, the big laggard today. Of course, we've had oil continuing to lose ground, not only on concerns about the broader global economy, but also because of the latest OPEC moves. But at this point, of course, it's all about those tariff news. And we're seeing a JGB yields now, the 10-year at that 126 level as well. As we continue to see a stronger Japanese yen, we had seen a little bit of relief on that trade, but right now headed towards that 145 level against the US dollar as well. And today, one stock that we'll be watching, 7&9, they report earnings. Take a look at how South Korea is coming online, because the Korean won is also being hit hard at the moment, at the lowest level since 2009 against the US dollar. It had been trading in a narrow range after sessions of losses on these tariff headlines, but we're seeing the renewed pressure right now as President Trump is speaking. He's right now saying that we're actually being nice about tariffs. Of course, he hasn't really spared any country when it comes to those tariffs, although Haidi has prioritized South Korea and Japan for those negotiations.
Yeah, and Australia, of course, we know hasn't been spared despite running a trade deficit with the United States. But take a look at how we're trading. We're already down by over 2%, just 10 minutes into the start of the cash session here in Sydney. We're seeing the Aussie dollar also coming increased pressure, still under that $60 level, so US cent level, I should say. So really that sort of proxy of risk, the secondary exposure to what happens with the Chinese economy should the 104% tariffs come into effect as of midnight New York time. That's all coming into play there. I should mention we're also watching potential unwind when it comes to US yields as well. We're seeing that big pressure when it comes to Aussie yields just tumbling in the morning session.
The Kiwi dollar right now, Haidi, also falling below that 55 US cents to the lowest since March 2020, as we're watching also the offshore yuan at the moment, actually rebounding a little bit, but of course that after falling to a record low. Our next guest says investors should be prepared for additional downside in markets. Joining us now is Xi Qiao, financial advisor and managing director at UBS. Xi, I mean, we had a little bit of a reprieve. That didn't really last long, and now that we are seeing the PBOC with a new reference rate that is at the weakest since 2023, are there more concerns that this could actually escalate to a currency war?
I mean, absolutely. We're certainly, hoping that this is not going to be an ongoing trade war. The U.S. has made some progress with smaller trading partners, but it will certainly require negotiations with China and EU for any real progress to be made here. So, I mean, our base case is that hopefully after the initial phase in which the tariffs could rise further, U.S. effective tariff rates should start to come down from hopefully the third quarter. But, before any real progress, again, has been made with China or the EU, we're certainly preparing for additional near-term downside. The S&P is currently not pricing much beyond a mild recession, so our downside scenario target for S&P could be even lower at about 4,000.
Yeah, as we speak, the Kiwi dollar continues to fall below that 55 US cents level to the lowest since March 2020. And this is, of course, ahead of the RBNZ rate decision today. A cut is expected as that economy is also struggling. We're also hearing from the Bank of Japan right now, Governor Ueda speaking about the uncertainties having risen at home and abroad because of Trump's tariffs. If rates stay low as price trends improve, that could be a bit too loose, as we are continuing to hear from President Trump speaking at that dinner saying, I know what I'm doing on tariffs. How difficult is the picture for central bankers around the world?
Yeah, I mean, this is a very tough time, obviously, for the bankers, central banks. And also, we're hoping that shifts in the Fed's policy stance could certainly help establish and maybe avoid a, further, decrease in the markets. But particularly, we hope that Fed can prioritize growth and financial stability at this point. So we expect the Fed, the tariffs continues. We expect the Fed to cut interest rates probably maybe by 75 to 100 basis points to support the economy. So, and that could put the S&P back on track for recovery towards year end, but it's hard to say at this point, again, until there's further negotiations with China or the EU.
How do you feel about domestic Chinese risk assets then? Because it could be a good diversifier. We know that some of the themes when it comes to monetary and fiscal stimulus, when it comes to boosting domestic demand, some of the private sector and tech advances that we've seen driving this rally to this point, it's still intact, right? Is there confidence there, or is it difficult to see those opportunities without a clear policy and political off-ramp between the US and China?
Yeah, I mean, it is a tough time right now. We're neutral on all equities. And we certainly expect China to accelerate domestic physical stimulus and anticipate a lot more support for tech innovation and self-sufficiency and monetary easing. I mean, all that is positive for Chinese equities. However, I mean, it is trading down below. Chinese equities certainly trading down below their recent highs, almost 17-18%. And we're bearish. We expect bearish outcomes due to the lack of just a clear roadmap for China, and also rising concerns with U.S. recession risks.
You're also saying manage that political risk with gold. We've even seen gold being sold off as well, presumably to cover some of these losses with the volatility in equity markets. You're also saying good quality bonds. Do they include treasuries, or is that now also becoming a risk as a haven play?
Yeah, I mean, these are all really good points that you raised. Certainly, in this market, we are definitely looking to manage more political risk with gold. And gold is sold off last Friday. Along with the market, a lot of that we think it might just be driven by margin calls. So the metal itself is a very good diversification for portfolios, and we target about 3,200 an ounce for gold. So that's a good play there, and it's certainly with quality bonds, high quality U.S. Investment grade bond, not so much treasuries, but we focus a little bit more on the bonds right now because the 10-year U.S. Treasury yields about 4%, which are close to our year-end target. So we expect that, with hopefully the Fed stepping in for rates to fall. So if we expect that to fall about 2.5%, that's going to offer potentially significant gains for bonds itself. So, and if you're staying out of the equity markets just to see, further observe the markets and how the tariffs are going to play out, I mean, bonds is a really good place to be in right now, especially expecting lower rates. And of course, the hedge funds are also a good time to look into those, especially with some of the multi-strategy macro type of funds. I mean, these strategies are good cushions and portfolios in these downside markets.
Xi Qiao, really great to have you with us to try and make sense of everything that's going on at the moment. She's a financial advisor and managing director at UBS. And of course, we're seeing a lot of moving parts when it comes to President Trump still speaking in D.C. at the National Republican Congressional Committee dinner. He's vigilant when it comes to pushing ahead, I should say, with the 104% tariffs on many Chinese goods. That takes effect, of course, after that midnight New York deadline. He's also saying that he's been open to negotiations as well. That is noon in Hong Kong if you're watching from that part of the world. Take a listen.
Don't want tariffs on themselves. And it's very simple. We're making deals and people are paying tariffs. Countries are paying tariffs. Right now, China's paying a 104% tariff. Think of it, 104%.
We're seeing that market reaction. The Kiwi dollar under 55 cents to the lowest since March 2020. We're seeing steep declines for the won, the Topix, the yuan, and European futures falling by almost 5% as well at the open. Let's get over to our Bloomberg News desk editor, Jill Desis, and our China correspondent, Min Min Lo, both of them joining us now. And Jill, President Trump saying at that event he knows what he's doing on tariffs. The markets are certainly concerned that either he doesn't or this is playing out in negative ways globally.
Yes, look, I mean, you're seeing those headlines cross your screen right now. A lot of the speech so far has, been about Trump really kind of defending and his approach to tariffs here. And I mean, really, and what you're seeing here is also this dichotomy between how Trump is approaching countries like China, for example, where they've retaliated with various measures of their own. They implemented, or they said that they were going to be implementing a 34% tariff on American goods coming in, hence this 50% rise leading to that overall 104% tariff on Chinese goods that you hear Trump reiterating right now. So that's part of one approach, this idea of the strongman approach. I mean, I'm not sure how playing chicken with Xi Jinping is ultimately going to turn out, but you do see, that sort of strategy. And then the other part of it is you also have Trump kind of relishing the idea that other nations are coming to him trying to strike deals. So you're looking at the administration, you've got Bessent, you've got Hassett talking about meeting with officials from Japan. We've also, seen them sort of, highlight Korea. These ideas of some of these countries where they say that they're willing to make, some more of these negotiations. And Trump, saying that he doesn't, he's saying that they're actually being very nice with the tariffs. I think was one of his, one of his comments here. So I mean, you do have that little dichotomy here in his speech. Of course, what that ultimately means, whether these countries can actually come up with negotiations that please Trump, I think that's still what we have yet to see here.
Yeah, President Trump just now saying that he's always had a very good relationship with China's President Xi Jinping. Min, we are seeing the defiance coming from Beijing already. Premier Li Qiang actually pretty optimistic about the growth outlook in his country.
Yeah, I think this is part of the Chinese policymakers' way of really trying to inject confidence into markets and into the economy. Premier Li Qiang saying that China has ample policy tools to fully offset any tariff risks, and saying that China's macroeconomic policy so far had already taken into account all of these uncertainties. And this is interesting because we're counting down the hours to 12 noon Beijing time when the reciprocal tariffs will kick in. China has said that they will fight till the end, but bear in mind, so far China actually hasn't retaliated against the latest round of the additional 50% tariffs. They retaliated against the 34% reciprocal tariffs, but not the 50%. So it'll be interesting to see if China will respond with more countermeasures seconds after those tariffs come into effect around 12 noon today. Because if you take a leaf from the past playbook, in the first two rounds of tariffs from Trump, the 10 plus 10% early this year, China retaliated seconds after those tariffs had came into effect around midday. So that's something we definitely want to watch later today.
We've been watching, of course, and canvassing a lot of the social media and local, particularly state-owned media, reaction to what's been going on in China as well. What are some of the potential countermeasures? Because there's a lot of chatter about now devaluation strategies for the yuan that we're hearing from traders.
Yes, there is the devaluation of the yuan. We talked about that earlier, and how China might maybe be a little bit more measured this time when it comes to how far they allow the yuan to depreciate, just because of the risks it comes with to the economy, the capital outflows, the shocks to the capital markets. But interestingly, on social media, actually, we're seeing a couple of influencers posting identical lists of potential countermeasures from China. Huge caveat here that these are not the official measures, but these influencers are pretty influential. One of them works for XinhuaNet, which is the website of the official Xinhua news agency. Another is the grandson of a former party secretary of Guangdong province. And they're listing these measures that include potential bans on Hollywood films, restrictions on U.S. services to China, significantly higher tariffs on U.S. farm goods, banning the imports of poultry, for example. So I think these are interesting things to keep a close watch on. Again, it doesn't reflect the official measures, but there has been a lot of talk about what else China can do.
As we're speaking, we're also hearing from President Trump, of course, giving that speech at that dinner, saying that they're going to be announcing major tariffs on pharmaceuticals. Of course, he had already sort of choreographed more tariffs to come. So we'll be watching some of those drug makers across trading in the Asian session as well, that they will be announcing that tariff on pharmaceuticals very shortly. They are now going to, of course, put those additional tariffs on China. Tonight, this has been confirmed by President Trump in his speech right now. He's now saying that he thinks that China will make a deal at some point. This, of course, all coming at a time when we're also watching European futures coming online. They've been hit, not surprising. We have seen a little bit of a reprieve on the European stock markets after 4 sessions of losses already, but the European Union has been singled out together with China when it comes to those tariffs coming into place from Washington. Let me turn back to Jill to ask about some of these trade negotiations ongoing, because, as I said, it seems that China and the EU will take the first brunt of the tariffs as Trump is getting ready to negotiate with some of its Asian allies.
Well, yes, and again, it's really difficult to tell how much of this is actually going to result in something that would make Trump happy. I mean, remember, at the end of this, these tariffs are not necessarily, calculated based on the true reciprocal measures that, some of these other nations have in place. In many cases, they're calculated based on deficits, and Trump has said that he hates trade deficits. I mean, it's really difficult for some of these other countries to try to figure out, okay, well, if that's ultimately the benchmark by which, Trump is measuring us here, then how exactly do we come in with a deal that's going to make him happy? Of course, some of his administration, as we were just discussing, has, talked about, some countries that they're prioritizing, Japan and Korea in particular. I mean, we heard from Japanese Prime Minister Ishiba earlier this week, they seem a bit bewildered by the 24% tariffs that they were kind of facing, these reciprocal tariffs, some additional autos tariffs that they're dealing with. So they're very keen to try to figure out how they can lower those. It does seem like that's at least a priority party of both Hassett and Treasury Secretary Scott Bessent. So that's some of those negotiations that are taking place. Korea as well is a big one. But again, we're just going to have to really see how all of this plays out.
Bloomberg's Jill Dissey's there, and Mimi Lowe, of course, dissecting President Trump's latest comments and, of course, some of those tariff actions that we continue to see throughout the day. But President Trump says he's had a great call with South Korea's acting president, Han Duck-soo. The country's trade minister is visiting Washington for tariff talks. Let's bring in our Asia stocks reporter, Yu-Kyung Lee. Yu-Kyung, so let me get started with the stock market right now, because you can see the Kospi down 0.8%. We're seeing the Korean won now touching a 2009 low against the U.S. dollar. What are some of the sectors that we'll be having to really watch out for in the next few days?
Yeah, definitely. Definitely, investor will be watching the auto industry, because the South Korea's auto industry is exporting about half of its vehicles to the United States, and South Korean government just unveiled $2 billion packages to support the auto industry, as is about to start the negotiations for the trade deal with the United States. Now, South Korea finally has some kind of a team put together so that it could negotiate some kind of deal with President Trump, because now the impeachment case is behind us, and we have the new presidential election coming up. So the auto will be on the top of the mind for the investors, as that will be the most impacted by the U.S. tariffs.
And of course, it's been really difficult, as you alluded to, officials actually coming out with countermeasures given the lack of a clear government here in South Korea. But we've seen the likes of the Bank of Korea, for example, trying to protect the economy. What are they doing?
So given the won's performance, its weakest level since 2009, it looks like there could be some limited tools that the Bank of Korea could use. Because of the tariffs and the South Korea's exposure to global trade, Bank of Korea is expected now to cut the interest rate wider and possibly faster. But a lot of market watchers also believe that because of the weakness in the won, until the currency stabilizes, the Bank of Korea may not be acting so soon. So next Thursday, when the Bank of Korea policymakers meet, they may not cut the rate, but they'll pay very close attention to this trade negotiation and the performance of the Korean won.
Yu-Kyung Lee, our Bloomberg Asia stocks reporter, with us as we continue to watch the meltdown across Asian assets at the moment. We're seeing the Nikkei, the Japanese market, also losing ground. Every sector in the red. Energy stocks, some of the most badly hit. On a day that we're also getting 7 & I Holdings reporting earnings as well. The Kospi down 0.9%. And the ASX 200 also losing ground on a day we also have the central bank rate. Yeah, take a look at how the markets are trading at the moment, because South Korea's Kospi, if we close at these levels, would be in a bear market already, falling about 20% from its July peak. The Nikkei is also down more than 3% at the moment. We actually saw a little bit of a rebound in the previous session, a little bit of a reprieve. But as we continue to hear from President Trump on his tariffs, we are seeing the ASX 200 also lose about 2% at the moment. And this, as President Trump says, that he's always had a good relationship with China's Xi Jinping. But of course, he's now going to be applying those tariffs additional on China. He's saying that China will be paying a 104% tariff eventually, although China is expected to make a deal, according to President Trump. We have seen that huge downside on Chinese equities already. Take a look at how futures are setting up, because we're hearing that the Shanghai Exchange margin balance has fallen almost 2% on the previous day. And we had already heard from the Taiwan Stock Exchange urging listed companies to buy back shares as well. You can see U.S. futures at the moment also pointing to the downside of almost 2% for the S&P 500. As we continue to see the global stock meltdown, the inaugural ASEAN Investment Conference is underway in Kuala Lumpur. Plenty to discuss, as we're going to see the region's top policymakers, investors, and capital market players get together. The region's growth high on the agenda, given, of course, it's been hit with some of the highest levels of President Trump's trade tariffs. Let's cross over to the event where Bloomberg's Avril Hong is standing by with our next guest, who runs Malaysia's largest bank. Avril.
Indeed, ladies. Joining us exclusively is Khairussaleh Ramli, President and Group CEO at Maybank. Great to have you with us, especially on a day like this. Tariffs, not just a concern for Malaysia specifically, but we're seeing these headlines for China, 104%. How do you see this playing out?
Well, it is still evolving, and people are doubling down. And, I think it's a moment of remaining calm and have a level head to be able to think about, what's next and what we can do, right? By the end of the day, for us in Malaysia and as Maybank, it's more about trying to understand how it affects our customers, how it affects our position, etc. And what we see is positive, at least for Malaysia and ASEAN during the last 2 days, is about being again level-headed, calm, and come to the table for negotiation. I think that's the right move in trying to not just calm the market, right, but trying to make sense of all the things that are happening.
Positive in what sense for your businesses that you are dealing with?
Well, we have customers who are in the export business, obviously being the biggest bank in Malaysia. So I think it's about, again, when we hear what the ministers have been saying, there's current framework from trade negotiation, free trade, etc. So let's come to the table and understand, right, what makes sense for both countries and what makes sense for the two economies, and then the companies that are involved in the trade between the two economies, and how then we can support in those areas.
Are you seeing businesses, your clients, maybe positioning in a way, maybe bulking up their cash reserves, being a bit more cautious at a time like that? Are you seeing that?
We are hearing them saying that they want to be cautious, because, again, things are so fluid, right? People talk about maybe relocating their manufacturing plants from Malaysia to US, but that kind of policy can change overnight, right? Given what we're seeing in the last few days. So again, I think it's just about remaining calm, be a bit more conservative at this point, and then see how things pan out.
Is the bank also being a bit more selective when it's lending, whether it's to corporate or retail?
Well, again, we are not overreacting, right? We are not over-responding. I think now it's about listening to our customers that are impacted. So as far as we are concerned, we've got strong liquidity, we've got strong capital buffers, and that can help soften any impact. Yeah, but I must say that again, export is one side, trade is one side. We still have that positive things on the domestic side, right? Our consumer side is strong. Our domestic demand is strong. We have seen a lot of positive outcome from the reforms and the structural reforms that are being done by the government. We've got the JSS we've got energy transition, and we've got the ability of the government to provide a bit more disposable income to the consumers, and that helps consumption as well. So I think on balance, yes, we have one side that is quite volatile, at least for our business, but we also got one side that I think will continue to be able to support growth.
Domestic economy, really that pillar. When it comes to the Johor Singapore Economic Zone, I mean, Maybank is a big player in supporting that. Yeah. How insulated do you think that's going to be from the tariff war?
Well, we have to maybe look at, because again, I like the comment from the minister from Singapore yesterday to say that, it is a win-win situation. It's not a zero-sum game, right, when it comes to JSS. Now, and I also like the narrative in the last 1 day or so in terms of looking at more collaboration within ASEAN in terms of doing trade and investment. Indeed, there will be some part of the FDIs that will come from outside of ASEAN, and hence that might have an impact to the economies of Malaysia and Singapore. But again, GSS is also about trying to promote investment, within ASEAN and within other countries other than US. So I see that it's a positive thing on the whole, as opposed to net negative.
Yeah, would you be able to perhaps put a number on the FDI impact?
Well, I don't have a number. Again, GSSZ is still starting. We are still having conferences and forums. In fact, there's one coming up later this month, right, between the two governments. But it's still early days to quantify the impact on the FDI itself. We have actually, our house has forecast a slight decrease in GDP, for example, from 4.9 to 4.3%, and primarily because of that. But we haven't gone down to quantifying the impact of FDI to our business itself.
What is your sense of whether we can expect Bank Negara to cut this year?
Given all this, we can see that along all the curves at interest rates, the yields have come down, right? Yields have come down in expectation of slower economies. And I think Bank Negara has got to do that balance between growth and price stability. But we think that in Malaysia, at least inflation remains quite low. It's about 1.8, 1.6% now, but the forecast for us is about 2.3, 2.5%. And that's still within that 3% overnight policy rate, right? But we think that there's room to manage the downside bias of the economy, of potentially, another 25 basis point reduction. So between 2.75 and 3% is what we think the OPR will be.
Just picking up on your point on the special economic zone, a big part of that is data centers.
Yes.
And with DeepSeek coming on, that's causing investors to kind of rethink how much data computing power is actually needed. Yeah. Do you see potentially a scaling back on data centers? Investments?
What we are seeing, at least growing in data centers in Malaysia, is basically the principals themselves, right? So the likes of Microsoft, the likes of Google's, etc. So these are people who actually need the computing powers themselves, right? Because these data centers are not renting to just anybody. These data centers are actually being built by those principals themselves, right? And hence they would need that particular infrastructure. So in my view, if we pivot towards that kind of lending policy, the risk can be mitigated.
What are you seeing in terms of investment flows from the likes of China, the Middle East, into Southeast Asia amid all this?
Well, I think, the China Plus One, for example, right? I think there's been quite a bit of migration of businesses from China to ASEAN over the last few years, right? Because of China Plus One. But now, given these tariffs that also trying to capture that intermediary goods, so to speak, that potentially can also have an adverse effect. But again, if we talk about direct trade, say between ASEAN, Malaysia, and China, that again is another potential, spot for growth, right? So not necessarily looking at intermediary effect of between China, ASEAN, and US, but direct trade between China and ASEAN itself.
It's an ever-evolving situation, but there are opportunities for us.
Of course. I'm always looking at it positively, right?
Look on the bright side.
And we are here not for just 1 week or 1 year.
Here for
We've been
the long
around
run.
for 65 years, and we need to...
Khairussaleh, really great to chat with you. Thank you so much for your time. Khairussaleh Ramli, CEO at Maybank. Heidi?
Avrahan there in Kuala Lumpur. Let's take a look at what we're watching when it comes to these markets, as of course we're seeing stocks, risk assets just dropping ahead of that China tariff deadline, where we could see 104% tariffs being placed on some Chinese goods. This is a picture when it comes to energy demand. Oil just extending that brutal sell-off as new waves of tariff threats really imperils that ongoing demand picture when it comes to global demand and that weakness expected from a number of major economies, including, of course, the likes of China and India, both impacted by these Trump tariffs. We're seeing downside about 3.25%. We've fallen to that 4-year low due to the trade war. We're also seeing lower trading when it comes to copper, of course, that proxy of global growth and China growth, and even gold continuing to see that volatility as we see really some loss covering potentially as a result of the sell-off in gold that we've had across the last few sessions. More ahead on the Asia trade. This is Bloomberg.
if Trump weren't there, if we had a sane person as president of the United States, that sane person would be taking a very hard line on China, because the Chinese are in fact not good. They're not team players in the world economy. And the Chinese are still trying to do that, which is insane, because it's the United States clearly, is not going to be a market, and the Europeans, the rest of the world is not going to take their stuff either.
I think that depends on the Chinese, and my advice to them would be that they have a lot more to lose than America does. That America holds the leverage, and everybody knows that, and therefore they should seek a détente, and they should offer concessions which would persuade the president to relent.
White House economic advisor Stephen Myron and Nobel economics laureate Paul Krugman with their outlooks for China and U.S. trade relations. We're counting down to the open for markets in mainland China and Hong Kong with just a few hours to go before Trump's additional tariffs take effect. Asia equities reporter Winnie Su joins us now with the latest. And Winnie, given the bloodbath across markets in Asia, should we just expect another sell-off in Chinese assets?
Yeah, it seems like for Chinese equities, things are looking pretty ugly again, especially before the 104% of tariffs potentially taking effect in just a few hours. So we've been talking to investors in the morning. They are nervous, they are anxious and worried because there's just so much uncertainty keeping that sentiment very fragile. So scenarios we are seeing is if China is actually going to just take this tariff, which is going to be a very big hit on the Chinese exporters. And if they are going to hit back, and that is quite likely at the moment when we see how the tough stances China and the U.S. are having so far, and that is going to hurt risk assets furthermore with such high level of tariffs. And investors are still keeping their hope there that there might be some negotiation coming which will bring a short relief to the market. But right now, overall, the sentiment, it's not just for China, but also for Asia broadly, remains really weak.
Yeah, it is about just the broader fragility in the mood, right? Having said that, a lot of the sort of strength in the narrative of potential fiscal support, monetary policy support, we heard from Li Qiang quite a tone of defiance in terms of the tools that China still has to support its economy. Could that be encouraging?
Yes, for sure. So for a lot of market watchers, that's what they are looking forward to. So just yesterday, we were talking to investors at Aberdeen saying that while we're seeing higher tariffs or a tougher stance from the U.S. Against China, that actually means that the Chinese government have to come up with even stronger policy supports. While they're already expecting policy supports to come with this tariff that has happened over the past few days, we're expecting bigger and stronger levels of support. And when you look at just from the equity side of things, yesterday we heard so much around the national team coming in to support. The state funds are buying the ETFs and the tech stocks. And beyond that, the companies are also announcing lots of buybacks, especially the A-share companies. So that is helping at least the onshore market to stabilize a little bit. So while we see still some volatility around the Chinese stocks, at least looking at the onshore side of things, there is still support from the government. And it seems like the government is really willing to be there to make sure that the downside is capped. So that's something that's encouraging to see so far.
Asia equities reporter Winnie Su there. Let's bring Garfield Reynolds, who leads our markets coverage, markets live coverage, I was going to say, here in Asia. And one of the things we didn't get to talk about is, of course, the power and the role of the national team. One of the other tools they have, of course, it could come with side effects, is what they do with the yuan.
Yeah, that's right. It will be interesting to see how they play the yuan, because the offshore yuan crashed in response to the 104% tariff announcement overnight. And now the question is, does the PBOC lean into that, or does it lean against that? It showed some willingness yesterday to let the yuan weaken, but it has shown in general that it doesn't want people betting on a one-way path for the yuan, and it has shown a willingness to kick back. And if it does, well, then question will be, does that mean that there are other measures that are coming to help? One of the things that struck me when you were asking the questions about Winnie, to Winnie and her responses was, very much the Chinese government has shown a willingness to help its markets out and to intervene. It's already in an easing cycle when it comes to the central bank. So you would imagine there will be some sort of response to assist Chinese assets and the Chinese economy if they are going to continue to double down on the trade war after Trump's announcement of 104% tariffs.
What does it mean for the broader markets? Because we're seeing a bloodbath across assets in Asia, but at the same time, if we see China, for example, as you said, trying to support its markets, could we also see some support for broader Asia?
Well, there's going to be efforts from governments across Asia to help economies and/or markets. We saw Indonesia desperately trying to avoid too strong a sell-off yesterday in its assets. There's the potential that Taiwan's stabilization fund will intervene to try and slow down the extreme declines that have been hitting Taiwan's markets amid everything. We also just had, South Korea is unlikely to directly intervene in its equity markets. It has been known to do so in the currency market, but there have been headlines out about how they're planning to support their auto industry. We can see some other measures going on there. It'll be very interesting to see what the RBNZ says about the expected impact of the tariffs on its economy and what it may do on top of the 25 basis point cut it's expected to deliver. We've also got a meeting that's due to happen in Australia between the government and the RBA and some other members of the council for financial for the economy, basically. There's no real possibility that you would get an RBA statement out of that or immediate RBA action, but that does raise the question of what the Australian government might do, especially with an election so close, in announcing measures to assist its economy. So you'll get a range of responses across the region to the extreme pain that is being signaled by these market meltdowns.
I like the headline, Japanese stocks back into grizzly bear zone, not just your average bear, but like truly an angry bear. It's interesting, right? You see obviously the pressure on the yen, what that means for exporter profits. Even if there is a trade deal, does it matter? Because we tend to see Japanese equities kind of falling when global risk appetite is so bad.
Well, yeah, that's part of that, but there's also, it's that theme is enhanced because of the way that these tariffs have been revealed, the continuing rhetoric. It underscores the message that the Trump administration is hostile to trade, really. I mean, trade requires there will be some trade deficits, some trade surpluses, with other economies. You can't balance trade at zero across everything. That's not realistic. And Japan is a leader in Asia of precisely the theme that they're an export-oriented economy. What made the Japanese economy into the very potent player that it is its success in making things that other people wanted to buy, especially the US, but not only the US. And it has shown the fact that it's being hit along with everybody else to some extent harder than others, even though it's mostly been sort of guided towards the idea that exporting to the US is a worthwhile goal, and it's shown a willingness at times to moderate some parts of those exports if the US gets too upset. You look at what happened back in the 1990s, but that's no protection now. Even if they do negotiate, even if they do come up with some sort of an agreement, how can they, and in particular how can investors, trust that that will create a sustainably better outlook for Japan and for the US economy and for the global economy. So in that situation, Japanese shares will go on being vulnerable, especially, as you say, the yen. We see the yen continuing to climb, and that's a further burden for Japanese stocks.
Garth, really good to have you with us breaking that down. On Bloomberg Markets Live, Asia team leader Garfield Reynolds here. More ahead on the Asia trade. This is Bloomberg.
It's time now to check some of the stocks that we'll be watching when markets open in Hong Kong and mainland China. Keep an eye on Chinese firms with trade links to the EU. Premier Li Qiang spoke to European Commission President Ursula von der Leyen, saying the two sides should have a new round of high-level talks, Haidi.
Yeah, also watching Shery of Chinese companies that announced share buybacks and stake increases and plans to do so amid the escalating trade war. And this is interesting. We were talking with Garth just earlier about some of the tools inside China's ability to respond and prop up and support its stock markets, right? The national team is one of them. These encouraged sort of buybacks is another. CNOOC, Costco Shipping, Postal Savings Bank of China among those in focus. I should point out it's not just the Chinese market that's encouraging this as a strategy. We're seeing that from Taiwanese regulators as well, given that market has been so badly hit by these tariff threats. As we count down to that 104% tariff set to take place against some Chinese goods as of midnight New York time, that is it for the Asia trade. Our coverage continues next.